Hi, welcome everyone to Coleman Report Live. We have Lance Sexton. This is Friday, February 11th edition. Lance, we've been joking about all the PPP extravagant, stories that you are dealing with, but we're going to talk about some fraud stories in a little bit. And welcome back. And we had a really amazing week. We had the award show on Wednesday. Congratulations again to everybody that won. We had a 159 webinar yesterday, and we had some questions that we're going to answer right off the bat. So welcome back, Lance. What's going on with, yeah, okay. Let's get into the questions first. These are from our webinar. We were about to submit a guaranteed purchase request for a partially approved loan. When the SBA initiated a loan review on that loan, could we still submit that guaranteed purchase, or do we need to wait until the proactive loan is complete?
Well, in this particular case, you'll have to wait until the loan review is completed, because anytime an SBA loan or PPP loan's been submitted for forgiveness, until a final decision's made, it's considered to still be in process. When a forgiveness application is submitted, the loan is on deferment again. So it's on deferment until SBA makes the final decision. So a loan review could mean a full denial. If you get a full denial, in that case, you should be able to submit for guarantee purchase after that. It could be a partial approval, which would result in you submitting for a reduced guarantee purchase after that's applied, or it could be a full approval and no guarantee purchase would be necessary. So Anna, you're going to have to wait until the loan review is complete before you can submit for guarantee purchase.
Absolutely. And we're going to be doing this Unforgiven webinar in the next couple of weeks. This is an ongoing discussion, Lance, right? I mean,
it's like I was telling you before we got on the show, Joe, every day, every week, there's something new that pops up. I had not received any requests for levies until recently, and then all of a sudden 20 came in a week. Levies are not unusual in this circumstance. If you're a regular financial institution with depository accounts, they can, in fact, levy those PPP borrowers' accounts in certain circumstances. But we're a non-bank lender, so we don't have deposit accounts. So I'm having to, over and over, send back a document that says we do not have deposit accounts. There's nothing to levy. So, something new seems to pop up weekly in PPP.
Yeah, and we were talking earlier about small business lender. These loans are $1 to $2 million, very sophisticated businesses, and when you're slogging through the PPP stuff, it's just, is there a light at the end of the tunnel, or are we getting to the end of it, or is it?
Well, I think everybody's working to the end of it, but as we get to the end, we're probably moving towards some more challenging PPP loans because. And quite frankly, when we all got into PPP in 2020, we thought we'd be done by the end of the year. And then we had a new round in 2021 with longer term. And so everybody's hopeful to be done by the end of 2021. Now, the end of 2022 will be, I'm saying 95% complete, but there'll still be some things that drag in to 2023 in terms of servicing. And Joe, prediction on my part, I think the largest number of guaranteed purchase packages on PPP loans will happen between September and November of this year.
Absolutely, yeah. Yeah, it's a good prediction. Let's keep on talking about PPP. Have you ever seen a 10-year term for a PPP loan? The national guarantee purchase? Yeah, go ahead.
I think it's possible. That is certainly, they're supposed to follow the servicing guidelines in the SOP 5057-2. I do think it's possible, and I can see where a financial institution would consider it. Let's say you had a customer who was a great customer of the bank, had other loans with the bank, had other deposit accounts with the financial institution, and they got a partial approval, and it had a pretty significant leftover balance, and say it was a 2020 loan, and they only have 2 or 3 months left in the note. Extending the maturity, technically you could, I would personally, as a best practice, I'd try to keep the extensions of maturity of any PPP loans to a max term of 5 years.
Yeah.
But if it's necessary for the borrower to repay the loan, I suppose I've not heard of anybody trying it. The SOP says you could, because it is the 7A loan.
Correct.
But as a whole, we're not going to want to live with a 1% loan for 10 years unless it's absolutely necessary.
Yeah.
So,
I think we have one more. Yeah. What do we do in case of the original PPP borrowers selling the company? It's a great question.
if the PPP borrower sold the company, then there should, if it was forgiven, not a problem. If it has not been forgiven, there should have been an amount escrowed in the sales agreement equal to the PPP loan and projected interest that would be escrowed until forgiveness occurred. And then once forgiveness has occurred, they can release that money to the seller, original PPP borrower.
Yeah. And we actually have another one from Hannah. Will the borrower get the money back if they make payments and it gets forgiven?
Yes, that should occur. If you have a loan that's been submitted for forgiveness and the borrower has made a few payments and it's fully forgiven, the payment money should be refunded to the borrower.
Excellent. All right. We are going to switch to Delaney. Are you there? We're going to do some fraud stories. Our lead story this morning was about a private equity fund. Welcome back, Delaney. It's good to see you.
Thank you.
Tell us about what Elliot Smerling did in this amazing story. I mean,
So Elliot Smerling pled guilty to 1 count of bank fraud and 1 count of security fraud. Now, this says $140 million in total from bank fraud. I went back and looked at the indictment. It really focused on specifically $95 million that he obtained from a commercial bank. It was going to substitute an existing line of credit, but everything he provided was completely fraudulent, made constant misrepresentations. So he provided a forged audit letter, forged subscription agreements, one from a New York private university investment fund. He stated that they committed $45 million and even faked a record showing that they transferred $4.5 million as proof. In addition, there was another investment management division of a New York banking finance or a financial services firm. Similar story, said they donated or dedicated $40 million to this private equity fund, made a $4 million transfer, and of course, none of this is real.
yeah, just incredible. Lance, we're seeing all sorts of fraud out there, but these are high numbers.
In this particular case, it was pretty sophisticated because he was creating fake financial statements. He was creating fake, Delaney called it a subscription agreement, and I guess when you've got an equity fund, that's what it's called, but I would call it a sales agreement, fake sales agreement, and even false wire transfer documentation. So this guy's probably going to spend a little time in the federal prison.
Absolutely. Yeah. Just submit to OAG, submit to the FBI, get everybody on board and move forward. So.
Well, and Joe, you make an excellent point, and that's true in PPP and SBA both. If you suspect fraud, it needs to be reported to SBA's Office of Inspector General. That's the process.
Yeah. Tell us about this next story. Businessman sentenced over $21 million bank fraud. What happened with Hogg and his co-conspirators, Laney?
So Mr. Christopher Hogg, I believe it would have been this week, was sentenced to 6 years and 3 months, 2 years of supervised release, and he had to forfeit over $17 million in funds and pay restitution of $750,000. So he has an insurance premium financing scheme, and him and this co-conspirator, Mr. Rodriguez, they submitted 35 financing applications to a finance company for loans to purchase insurance. They, in addition, had another co-conspirator, which probably really helped get those loans. He waived the loan verification procedures and approved them in exchange for compensation from these loans. So now they're awaiting sentencing, but similar to some of these other stories we hear, their use of proceeds was interesting. One of those includes a Mercedes-Benz S-Class, the purchase of a $1 million mansion, country club dues. So really supported their luxury lifestyle.
Absolutely. I mean, just again, Lance, we did a webinar yesterday on 159 on fees, but I don't think this is just another example of a fraud that went bad for a lot of people. So.
Well, and the huge mistake they make so often is maybe they come up with a great scheme, but they always want to step out and buy something big and flashy, which
I don't get it.
You're going to get caught.
A Mercedes in a country club, yeah.
So it's like I said, this another one where they're taking money from financial institutions to buy or to fund insurance premiums, I guess, or an insurance premium financing company. Pretty interesting type of fraud here. And again, these guys are probably going to join our previous gentleman with a little time in the federal prison.
Last story today is about a PPP loan, $900,000 laundering scheme. Go ahead, Delaney. You can explain this, and then we'll chat about it for a bit.
So Mr. Benjamin received over $900,000 in CARES Act funds. I believe it might have been EIDL as well, but PPP was the main focus here. Once he received these funds, he transferred them somewhere else, but these funds came from a man, Donald Trozan. He had submitted over 20 fraudulent PPP and EIDL loans, claiming he had 120 employees on his payroll, over $5 million in payroll, and of course, he didn't own a business of any sort. So now they're also probably going to be facing some good time for this.
20 applications, Lance. Have you seen anything like that? I mean, I'm sure you.
Well, I think
I'm sure you've seen everything at this point.
I think that, of course, this is big PPP fraud, and some of the PPP fraud in 2021 concerns smaller loans, but they're groups. Instead of somebody fraudulently getting one loan, they're gathering groups of people and getting multiple loans, and the numbers add up. Again, PPP fraud, I always want to emphasize, as a percentage of the overall program, we can't take away from the importance of what PPP did, but we are going to talk about PPP fraud for quite some time as we finish out this PPP forgiveness and servicing.
We got a question from Craig, longtime listener. Craig, welcome back. Any word on a 90% guarantee this year, Lance?
Have not heard a thing, Craig, for the question we all wanted.
Yeah, absolutely.
And, we were talking about getting money out to underserved small businesses and getting financial institutions to consider smaller loans. Well, the easiest way to do that is to give banks a 95%, whatever the percentage, but 90% guarantee, and they'll jump in and make those loans. But I wish I could tell you, yes, I heard it's on the agenda, but I have not.
We are publishing our compensation survey. Thank you, everybody. We had a ton of responses this year. Delaney, we're going through those, and crunching all the data. All I know is that it's extremely valuable for SBA lenders to have that skill set as a banker, Lance. I mean, it's been two incredible years, and being any of these in the department is extremely valuable. So.
Well, and I think for the C-suite, for the hiring officials and SBA departments, it's an incredibly competitive hiring landscape. There are not enough SBA people out there. I encourage every young person stick with it, because there are a lot of old gray-headed SBA folks like myself that are not going to be around forever. So there's great opportunity. And one thing I think will come out of the compensation survey is compensation for SBA skill set bank employee or financial institution employees has went up. I know we're going to see bigger numbers than we've seen previously.
Yeah. Yeah. So thank you for everybody's responses. We're going to publish those in the next couple of weeks. So we're working on that now. We're going to do our hotel webinar March 2nd. Hotel industry, Lance, is just still struggling, but we're going to go through all the numbers, and I think there could be some positives to have that discussion. We love to go through SBA financing for hotels. So.
Well, and not every hospitality loan is a good one. Not every hospitality loan is a bad one. There's a place near Delaney and I. Delaney and I are not in the same community, but just north of us, Branson, Missouri. Mm-hmm. Because it's a destination, the hotels are doing incredible up there. And if there was a new project you were looking at in Branson, I know I have a lot of friends over in Springfield, Missouri, who are in SBA lending. But hotel projects in Branson probably are excellent. But there are places where the pandemic had a devastating effect and then still impacting the hospitality industry. So it's good to have the numbers to make your decisions on. And this webinar does a great job of providing that. Real quick comment on the PPP servicing, Joe. That one's an ever-evolving webinar. And there's probably going to be new things that happen between now and March 9th that will be included in that webinar.
Yeah, and we're starting to get some guidance out. We heard from SBA after 6 to 8 weeks of not hearing them, for a long time. So I think we're starting to get some stuff, and we're going to keep on reporting that. But yep. Delaney, thank you very much. Excellent. Hope you have a good weekend. Hope everybody has a good time watching the Super Bowl this weekend, and we're going to see you guys on Monday, and this concludes today's webinar. So have a good weekend, everyone. Thank you.
Have a great weekend.
Have a great weekend.